Hello dear students, final accounts is divided into three parts. We have learned the first one is trading account, second one is profit and loss account, third one is balance sheet. Trading, profit and loss account we have seen already. Now coming to the balance sheet, how to prepare balance sheet. Balance sheet will represent about the assets and liabilities of any company. So assets and liabilities we put it in this statement. Balance sheet will exactly reveal the financial status of any organization at a particular period. For a year of 2019 or 2000 year or 2015 year, any year you will come to know exactly the financial position of that organization by looking at the balance sheet. So that is why balance sheet makes a lot of difference. It is a very much important statement in any organization. So how do we prepare this balance sheet? We'll see today only the pro forma, because if you understand the pro forma, workouting problems are quite easy. So let's enter into the balance sheet pro forma. So this is the account. Please remember, balance sheet is not an account. This is a statement. Trading account, profit and loss account, these two are accounts, but balance sheet is a statement. It's not an account. That is why we don't write debit credit in the balance sheet. We don't write anything. Simply we'll write assets and liabilities separately. See, this is the pro forma. Right side we write the assets, left side liabilities. What assets we'll write? First we'll discuss about the assets. All kinds of assets, whether it's a liquid assets which can be convertible easily into cash, liquid assets. Fixed assets also will write, fixed assets like land, building, machinery, plant. So all these things are fixed assets. And also intangible assets like goodwill, patents, copyrights. So this also we write. Three kinds of assets, we write it in the asset side. See, few transactions I've taken, maximum it's covering. One is cash in hand. When you have cash in hand, that's a asset. Cash at bank, when you keep some amount in the bank, some rupees in the bank, then it's a asset. So cash in hand, cash at bank. Next, outstanding income. Outstanding income means receivable income. Something is not received but receivable, not going to receive. It's an asset. If not today, tomorrow you are going to receive. So that is why receivable income, we consider it as a asset. Receivable income. Say salaries receivable, rent receivable. We are going to receive, receivable, we are going to receive. Going to receive means it's an asset, we consider it. In the same way, prepaid expenses. Prepaid expenses. Expenses we have paid in advance. Prepaid expenses. Like rent we have paid in advance. Suppose this is January month, suppose say. February, March also I have paid. 2 months advance I have paid. 2 months advance I have paid means that's an asset. Future I need not to pay. So that is why prepaid expenses we consider it as a asset. Next, investments. When I put my amount in the form of investments in any company, investment. Future I am going to use it. Anyway, it's a asset. So investments we consider it as a asset. Next, sundry debtors. Sundry debtors means when we sell the goods on credit basis to someone. Suppose say A and B. To A and B we have sold goods on credit basis, not cash basis. Future, later they are going to pay the goods amount. Later they are going to pay. Anyway they are going to pay. So that is why we consider A and B as assets. Means A and B we call them as debtors. So that is why we are saying sundry debtors. Sundry means various. A, B, C, D, many debtors there may be. So that is why debtors is considered as a asset. Next, bills receivable. When we give some amount to someone and they have written, they have promised or they have given some bill. So that is receivable, bill receivable. I gave some amount. Future they are going to pay the amount. That's written in a bill. Bill receivable asset. Next, advances given. Advance I'm giving. Advance, whenever I'm giving in advance some amount, automatically that will be an asset. Okay. Next, land and building. Fixed asset. I have land, I have building, it's an asset. Then furniture, fixtures and fittings. Furniture, fixing, fittings, all these things also we consider it as a asset, fixed asset. And land and building also fixed asset. Plant and machinery, fixed asset. Patents and trademarks, this is intangible asset, invisible asset, intangible. Can you see the patents? No. Copyrights you can't see, but you can say it as a asset. Means it is going to work like an asset for the organization. For the past, say example I am giving you, for the past 10 years I have settled one business. So that is an asset for me. 10 years struggle, then some name, that patent name I got it, that's a asset. In the same way goodwill also. Goodwill means the name and fame, some kind of good impression about the organization towards the customers, that is we call it as a goodwill. Goodwill. For example, in Gokul Chaat, Hyderabad. In Gokul Chaat is a very famous. And in the same way Hindustan Lever Limited, it's having its name, own name and fame. Apple company, Godrej company, any business if you take, they have some brand. For that brand, people are relying, people are trusting, people will buy the product because of the brand name. They got some name, that name and fame, for that purpose they calculate this goodwill. Goodwill is an asset, intangible, not visible, but it's an asset. Lastly, closing stock. When we do the business, end of the year leftover stock, that is we call it as a closing stock. Leftover stock, next year we are going to use it. So right now this is asset, closing stock. End of the year we have leftover stock, this is an asset for this year. Next year we are going to use, next year it will be opening stock. Get it? So these are the assets. Now coming to the liability side. On liability side, first amount is capital. Capital we are writing, capital always inner column, because to that capital we have to add net profit or net loss. How do you got net profit or net loss? This is from the profit and loss account. Profit and loss account we got net profit or net loss. If you get a net profit, we'll add. If you get a net loss, we'll deduct it. That is why this is pakka, sure adjustment. Apart from that, if at all interest on capital is given, that is to be added to the capital. Interest on capital, add to the capital. Drawings and interest on drawings, both you have to deduct. Drawings, interest on drawings, both you have to deduct it. Remember this adjustment, very important. Capital inner column. Net profit or net loss, we'll adjust it. Net profit, add. Net loss, deduct it. Interest on capital, add it. Drawings, interest on drawings, deduct it. And finally the amount should be written on the credit outer column. Okay, this is about the capital. Next, sundry creditors. Sundry creditors means from whom we have purchased the goods on credit basis. Those people are creditors. Suppose say from X and Y, X, Y, Z, from these three people I have purchased goods on credit basis, not on cash basis. Means future I have to pay the amount to the X, Y, Z. So these people are creditors. I have to pay. That's a liability. That is why we say sundry creditors. Sundry means various. X, Y, Z, maybe more. So everything is creditors, liability side. Next one, bills payable. When I have taken some amount as a loan from anyone, so that amount I have to pay. For that I have written a bill. Payable, liability. Bills payable. Next, outstanding expenses. Expenses I did not pay so far, need to pay. Means payable, outstanding expenses. Say for the last 2 months I did not pay the rent. Outstanding rent. Say rent is 5,000 per month. 2 months I did not pay. Now outstanding rent is here 2 months 10,000. Per month 5,000, 2 months 10,000. So we'll say it's a liability, I have to pay, right? So outstanding expenses, rent, anything, any expenses need to pay, I haven't pay, I have to pay, then that's an expense, that's a liability. Next, income received in advance. If we pay in advance, asset. If we receive in advance, liability. So rent we have received in advance, that we consider it as a liability because we have to, that won't be for this year, next year's amount we are receiving, next month's amount we are receiving. Anything received in advance is a liability. Paid in advance, asset. Income paid in advance, asset. Income received in advance, liability. In the same way, loan on mortgage. Mortgage means say I want few lakhs of amount, say 50 lakh of amount. So this flat or house, I kept it on mortgage. We don't say it as mortgage. T is silent here. Mortgage. So I kept this house papers on mortgage and I got a loan of 20 lakh rupees. So when I am taking 20 lakh rupees as a loan on this mortgage, then that's a liability. I have to pay it some other time to get back the papers of this house. So that is why loan on mortgage is a liability. If I take loan from bank and if there is any overdraft balance in the bank, that is also liability. Loan taken from the bank, I have to pay. So that's a liability. Bank overdraft, more than the amount I am drawing it, that's a liability. Okay, these two. And also reserves. Please remember, generally reserves we shouldn't consider it as a liability, but we are considering it as a liability. We are writing in liability. What is reserve? Reserve is the surplus amount from the last year profit. From the last year we got some amount as a reserve. So this reserve we are keeping it as a liability. If we consider it as a profit or something else, we will spend it very easily. So we consider it as a liability. As a fund we are going to keep. As fund received from outside, in that way it will be considered it as a liability. Reserve, fund, reserves. Are you getting it? That's all. This is about the balance sheet. You can take a screenshot or note down. If you understand the balance sheet, trading account, profit and loss account already we have done. If you know the pro forma, automatically we can work out the problems very easily. Make sure you must be very clear up to here. Final accounts, whatever I taught, everything you must be perfect. Next class, we are going to start the problems related to the final accounts. Together we'll start the problems. Okay. So please go to the description box and find more topics, more subjects, or go to the playlist also. You can check out what is needed, what is there in your syllabus, and what is useful for you, which already I taught, so that you check it out and use it and enhance your career. Commerce subjects, commerce management is quite easy. Only a simple logic if you use it. Nothing to worry. I'm here. So please take care of your career. Practice well. Good luck.